Welcome back to the channel, guys. It's that time of the month where we go through how income shares has done versus the underlying and versus some of its peers like YieldMax. So I was hoping to get this video out yesterday, but I got a bit tied up, so I'm going to get out this morning. Also, some of you have asked me around setting up a Discord focused on education, and so I've done that. The link will be in the description below. So please come and join us in there and have conversations with like-minded investors. Anyway, let's get cracking with this video. We've got, in terms of January, the underlying has come out on top, YieldMax then next, and income shares last. So we'll start to dig into the detail of why that is and where they've done well and where they haven't done so well and what the gaps are like. January, silver was the clear winner, and income shares, silver fund actually did the best there. So that isn't greatly surprising. We've seen all the rallies that have been occurring with gold and silver and then the bounce backs, etc. And we also know that crypto's not had the best period. However, at the time of recording this on Saturday, the 7th of Feb, crypto has had a rebound. Okay, so let's start to dive into the numbers now. So the top asset winners was silver at 27%, Alibaba at 15.68%, gold at 12.27%. So good month for the commodities. In terms of the losers, Coinbase 17.83%, Palantir 17.53%, and Microsoft at 11%. Now, Palantir also did a bit of a rebound based on its results, so we'll see what impact that has in the month of February. Okay, so silver, as we said, income shares did the best at 27%, closely followed by its peer at 26.24%, and the underlying asset did 17%. So we can actually see quite big outperformance from the income funds here. If we look at Alibaba next, again, we can see the underlying did the best here at 15.68%, followed by income shares at around 13%, and YieldMax 12.25%. So fairly close between income shares and YieldMax, and the underlying asset pulled away a little bit there. If we look at gold next, the underlying asset did the best at 12.27%. Income shares came next at 8.69%, and a peer came in at 6.57%. So again, fairly good numbers across the board, but the underlying asset typically did the best. AMD next, if we look here, it's fairly close between income shares and the underlying asset. Income shares did 11.2%, the underlying asset did 10.5%, and YieldMax really underperformed here at 3.5%. So we can see a good outperformance from income shares versus YieldMax there, fairly close to the underlying asset performance. Meta next, and we can see the underlying asset did the best here at 8.55%. Interestingly enough, YieldMax did fairly close to that at 6.85%, and income shares really underperformed. I'm not sure why that is, but I'm going to start to dig into some of these numbers over time. But I guess these are monthly numbers, not quarterly numbers. So again, we just need to bear that in mind. Alphabet next, and we can see here, again, it was fairly close between the underlying asset and income shares. So underlying asset was 7.99%, income shares was 7.61%, YieldMax 6.73%. So generally a good performance across all three here between all the three funds. NVIDIA next, so the underlying asset did 2.48%. YieldMax actually did the best here at 3.75%. Fairly close was income shares at 3.16%. So both income shares and YieldMax outperformed the underlying asset, which is good to see. If we look at the S&P 500 next, SDTY did the best at 1.84%. The underlying asset, the S&P, did 1.47%, and income shares did 0.45%. So a bit poor performance for income shares here, but again, the underlying asset and the peer did quite well here. So if we look at Invesco QQQ next, again, it was fairly close across the board. It was a small win for the underlying asset at 1.23%. We can see followed by income shares 1.2%, and the YieldMax QQQY at 0.78%. So again, fairly close across the board, but again, the underlying asset just edging it out there. If we look at the Mag 7 next, so we can see here that actually in terms of performance, the underlying asset did the best at 0.55%. Yield max was ever so slightly negative at 0.01%, and income shares actually did the worst at negative 2.17%. If we look at the Treasury next, we can actually see here that the underlying asset went out at 0.03% negative. Income shares was also negative at 0.13%. So a little bit surprising there. Would have expected income shares to generally do better in the underlying asset with the income, but it seems to have not done so. We're entering the crypto space now with MicroStrategy, and income shares did the worst here actually at negative 4.39%. Yield max did slightly better at negative 1.80%, and the underlying asset at negative 1.47%. So again, slightly surprising numbers there for income shares. And actually yield max did fairly close to what the underlying asset did. Again, I was expecting yield max to do slightly better with the strategy of income offsetting it, but it clearly didn't help in this instance. Tesla, again, Tesla had a fairly good performance last period, but this period it's down. Underlying asset is the worse off at negative 4.29%. Income shares is again slightly worse at negative 2.52%. And yield max actually does the best again at negative 1.65%. So again, it's interesting to see that yield max has done better than income shares and the underlying asset there. If we look at Apple next, again, fairly close numbers here, to be fair. The best performing again was yield max at negative 4.13%. Underlying asset was negative 4.55%. And again, the worst performing was income shares in this case at 5.34%. So again, something's working against income shares here. But again, bear in mind that these numbers were quite close for Apple. Broadcom next, again, the underlying asset did the best at negative 4.28%. Its peer did negative 4.5%. Again, income shares was the worst at negative 6.32%. So again, it's fairly close between the peer and the underlying asset, but the underlying asset just about edges it out. If we look at Microsoft next, we can see that yield max again performed the best. So negative 9.77%. Next was income shares at negative 10%, and the underlying asset was negative 11%. Fairly close numbers across the board, to be fair, and the volatility of Microsoft is quite low, generally speaking. We've got Coinbase here. So again, yield max came out on top here at negative 13.42%, fairly close to the underlying asset of negative 13.89%. Income shares again did worse here at negative 17.83%. So again, slight underperformance there from the income shares fund. Palantir next. Again, the underlying asset dropped quite aggressively here, the worst performing at negative 17.53%. We can see income shares was actually the winner here at negative 15.16%, and yield max fairly close at negative 16.1%. So this time income shares actually comes out on top. So in terms of the analysis, January 2026 was a mixed bag. Underlying assets rallied hard in silver, Alibaba, and gold, taking the top spots. However, in negative trends, Tesla, Apple, Microsoft, Coinbase, yield max and its peers proved superior by significant buffering losses. Income shares notably outperformed the underlying in silver and AMD. So there you go, guys. That was the summary for January. Let me know in your comments what your thoughts are on this. As always, none of this is financial advice and for education purposes only. And I will catch you on the next one.